Hello traders everyone, my name is Gregor Horvat and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting and important developments for this week. This video has been brought to you by Orbex. So I'm back from vacation. Now it was maybe not a bad idea to be out of the markets for this period, because we have a pretty thin trading conditions. We are in the middle of the summer, so that's not a surprise. However, dollar has recently seen some very nice recovery, and this can be due to the fact that Fed announced, particularly Powell said in the last meeting, that they are waiting on more economic data. So it looks like that there is still chance that they will hike in the future if economic data will be strong. Okay, because they want to slow down the economic activity to bring down the inflation, which is still not at their 2% target. So looking at the dollar index, we are seeing a pretty nice and strong recovery after this failure breakdown here below 100 for just temporary period of time. So we are now in a corrective phase, and corrections can be zigzag, can be flat, can be a triangle. But based on this interpretation here, I'm looking for a chance to be a zigzag in place. So even if it's a zigzag, meaning that there will be limited upside, there is still room for more gains, and I think that this could easily rise towards 105, 106 resistance, because notice that we are still only in wave A, first leg of a free wave recovery, right? So we are in the middle of this correction. Now, the next wave count that I'm also observing is that maybe the impulse down from 2022 highs has ended here back in February rather than here back in July. So if we respect the idea that maybe this has ended here in February and that this whole movement is corrective, then this can be also flat. And in flat, we can also expect that wave C will reach the extreme of the previous wave A. So you can see that we have the same resistance. The only difference is that then wave C will be impulsive and that the recovery will not be in free waves. If recovery would be in free waves, then another scenario, the valid one, would be also a triangle here. Okay, but for now we will stick with these two counts, so either a flat or ABC to the upside. What's the most important is that in both cases we think that there will be more gains, because looking at the 4-hour time frame here, you can clearly see that this is 5 waves up, potentially approaching some resistance here now for the FOMC minutes. So maybe we will see some slowdown, because I don't really expect that we will see anything new from the minutes. So maybe the price action overall will slow down, could be even sideways for the rest of the August. So I would not be surprised if we see this wave be unfolding over the next few weeks. Okay, but it's still a bullish pattern. 103.60 is just temporary resistance, very nice support on the way up. After this dip would be at 101.75, right? Okay, so now when we have dollar wave count very clear here, we said we are bullish, but temporary we are expecting pullback, and then maybe 105, 106 will be resistance for our next major sell-off on the US dollar. But for now we are still in the recovery mode. So looking even at the S&P 500, which is one of the reasons why dollar could be rallying higher, is because stocks are in retracement, and you can clearly count 5 waves down here, potentially still in wave A. So even this one suggests that we are in the first leg of a free wave setback. So these corrections, in my opinion, could be even deeper. Now, one very strong support lies around 43.70, but of course this will matter only if we will see move into that level in free waves. If that would be just with wave A coming back to the downside, then we will have to respect that market will move even lower. So if suddenly, let's say, we will stabilize here in the near future and then maybe rally, then resistance for wave B would be at 45.40 at the former wave 4, and maybe this swing resistance also matters at 45.18, but afterwards expect the final drop to complete this counter trend movement here around 43.70. Also, looking at the daily chart to give you the full perspective here, we are still in this corrective cycle with an uptrend. Okay, so that's a wave 4, and notice that very nice support again, very important level could be seen here at this wave B within previous correction lies at 43.28. So 43.70, as I said, 43.28, these are important levels. Okay. Also, now when we have stocks in pullback mode, dollar index making 5 waves up, commodity currencies are very weak, and Canadian dollar is not is actually is not different. We have the very similar price action compared to dollar index. We are seeing a very nice strong rebound here away from the major trend line support. Also notice that this current rise is coming out of this wedge, and in Elliott wave terms, whenever we have wedge potentially even ending diagonal here after 3 waves down from 2022 highs, well, this is very significant because normally you will see a very strong reversal in price, and whenever ending diagonal is completed and move out of it is impulsive, like in our case, you can expect that market will retrace all the way to the starting point of this wedge pattern, which is actually here at 1.3860. So it looks like that we still have a lot of room to recover here. So I may even play some positions on the long side after the dip. Notice that here we have a pretty straightforward, clear directional wave count. It's waves 1, you had a very nice wave 2, and looks like that this could be an extended wave 3 in progress still. If maybe this wave 4 will be a bit more complex, or maybe wave 3 is already close to resistance. But in either case, I think that the next pullback here could be opportunity on the long side. So very nice support as I look at this intraday section here is very nice, around 1.3386. It was the previous swing high. Also some swing supports here as well, and let's not forget on this base channel also, because whenever market breaks out of this bullish base channel, and you can see that it's a bullish channel but price is trading and accelerating even out of it, it means that most likely this is an impulse, because this represents the very strong directional movement within uptrend. So I would be looking for further gains here after the pullback, because then this wave for pullback could find the support in one of these trend lines. At the upper trend line, maybe at the middle trend line. But the lower trend line should definitely stay in place for this impulsive recovery to resume. If this lower trend line is broken, then we know that something is not right and that market is changing the direction. Now also let's take a look on the Aussie. So Aussie is also in a pullback mode. It has a lot to do with China. As you know, economic activity China is still not picking up, and obviously that's because interest rates globally, especially in the US, are high. So there is not a lot of orders coming from China. So obviously that's why we are not ordering a lot from China. Okay, that's what I'm trying to say, because the rates are high. So obviously you need to have lower rates to support the economic activity. So if in the upcoming months or early 2024 we will finally see that rates are done, then I assume that of course this will be supportive finally for China as well. So for now we are not there yet, and that's why Aussie is suffering, Kiwi is suffering. So Aussie here, in my opinion, could be targeting the 78.6%, is 64 level, okay, around there. So for now, even if we are close to the support, we have to observe and keep in price action, keep an eye on this price action within wave C. Keep in mind that whenever we track a counter trend movement, this wave C should be structured by 5 subwaves, okay, before we can expect a rise. And as I will show you here on the next slide, notice that this drop from that high is still, in my opinion, not in 5 waves. We are seeing a very nice ongoing bearish impulse with an extended wave 3, now trying to stabilize here at the 2023 May lows. So some stops were cleared here, and that's why price could potentially stabilize. Also, as I said, wave B rally could happen on the S&P 500, and this could potentially also give some chance to rally on the Aussie. Okay, but even after recent RBI minutes, Aussie is not showing any kind of a strength, even if they said that more additional tightening is needed. Still Aussie is cannot find buyers. So if we see any kind of a rally, I think that there can be even opportunity on the short side. So very nice resistance for the next wave 4 here could be around 65.20. There you have this this trend line of base channel as well, around that level, and then you have this resistance at 65.90, okay, which was the previous swing low. So as long we are below that levels, I really think that this pair is headed to the downside. But if you want to be on the short side, maybe it's better to wait on these FOMC minutes and then potentially trying to catch the rally here. Okay, now finally let's take a look on the crude oil. Now crude oil is seeing a very nice recovery. We've been tracking this recovery for a while after this downward channel has been broken. So we're now at the first resistance here at 83.86, but there can be even chance for $94 per barrel if maybe when, I should say, when stock market will complete the current pullback. But for now, we are not there yet. However, looking at the substructures here from that lows here, which by the way was a swing low around 67 here on crude oil, I think that there is a very nice support and chance for more upside after this current correction is completed. So I'm observing from this 67, I'm observing a 5-wave rise, okay? So this 5-wave rise is still ongoing. Why I think we are still in a wave 4? Because if you look closely here, we have seen move to a new high in 3 waves. And whenever move to new highs in uptrend is in 3 waves and then market pulls back, keep in mind that this 3-wave structure is probably part of a complex correction rather than end of a wave 5, because wave 5 is a motive wave, meaning it should be completed by 5 subwaves, okay, rather than only 3 waves. So that's why I think that wave 5 has not ended here and that there can be room for more gains. But I'm looking for potential wave 4 to be complex, as I said, potentially flat, maybe even a triangle. For now, I will stick with the flat, and in flats, wave C can retrace all the way back to the wave A area, which is here around 78, slightly higher dollars per barrel. There you have also this 38.2% measured from that high and the 23.6 measured from end of wave 4. So whole area here could be quite important in my opinion for the next bounce. But after 5 subwave zones are completed here, okay? And validation level obviously here is at 72.67. So as long as we are trading above that level, this trend is clearly still bullish, okay? Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you next time.